Well, a little bit of a back footing for the central bank yesterday, starting the week at the Treasury's market. The financial regulator offered two different tenored instruments, 100 billion each. That gives a total of 200 billion at the Treasury bills window. Not a single sale was recorded. And that's the first open market operations to start this week. Let's talk about the yield curve. Let's chase it around a little bit and see what is going on there with the sell-off on the equity side. On one hand, what's going on at the other side of the street? Wale Olusi is live to us from our studios at the Nigerian Stock Exchange. Wale, thank you very much. It's good to see you, the acting head of research at United Capital. Let's get this conversation. Let's start from yesterday. That's quite interesting that the central bank couldn't make a single sale of 200 billion naira treasury bills.
I think the CBN is trying to, be adamant with what the market is saying. The market wants more. If you want to mop up liquidity, they want a higher rate, clearly, from all indication as per what we've been saying since last week up until what happened yesterday. But the CBN simply would not. And I think that's why they recorded a zero subscription for what they offered yesterday. Clearly, with all the political issue we are seeing, as well as continuous exit of offshore investors, I think it is apparent that the market is gearing up for a higher yield environment, and then that's what they are simply saying to the CBN, and that's why the subscription was recorded at 0% yesterday.
What are investors in treasuries looking for? What yield are they chasing? What level?
Well, I think it's a little bit difficult to say precisely what exact yield they are asking for. But if you look at the very shorter end of the curve, where you've seen, a little bit of a very flattish yield, unlike at the longer end where we've seen consistently, a gradual uptick in yield. It looks like people are, expecting that as you approach the, election date, there's a likelihood for yield, the demand for rates to be a little bit higher. So what that will mean is that you continue to see a gradual uptick. It might not just jump immediately, but you continue to see a gradual uptick, say 35, 40 basis points per week, gradually, and there's a likelihood for the yield curve to flatten out as we, approach the election period, because that would mean that there's a lot of uncertainty in the economy as per who exactly will emerge as the president going into, the next tenure. And once that clarity, is known, you will see the yield curve normalize again, and you will see it, sloping upward. But for now, it looks like that gradual uptick has begun. When you look at the, 1-year instrument up until 20-year instrument, they are going a bit higher. But at the very shorter end of the curve, 90 days, 180 days, is quite, very flattish there. And I think that's where investors are asking the CBN as well as the DMO to give them something a bit more. But it looks like they're adamant.
No, they're reluctant. Yes, there's no money, and that's the truth here. If you're asking the central bank to top up the rate for investors on market straight and the DMO, of course, we have the September auction coming up in about 2 weeks from now. I'm sure the savings bond for the month of September should be out on the street even as we speak. So all this put together means that the debt office on one hand and the central bank on the other has little room to move forward. They're reluctant because for every single notch or basis points on the rates means that that's the cost of borrowing. And it looks like this administration have said, look, we want to borrow lower and try to clear up the backlog of what we have by repaying for investors. But this political premium, as we want to put it now, is becoming a very difficult issue to resolve, and the market is beginning to display that. Wale?
I think at some point, the authorities, both the CBN as well as the DMO, will definitely have to budge, because if you look at the NTB calendar that was released earlier this week, we are rolling over about ₦1 trillion for Q4. Also, if you look at all the effort that the authorities have been putting in place, there's credit money, there's a lot of facility going out there to the real sector, and GDP is slowing. It means that, you know, you are going to actually have a lot of liquidity in the system. So at some point, CBN would actually try very hard to mop up. Now, add the election spending to that. It might not be as much as what we have in 2015, but if you add all of this, you will know that you are going to have, you know, a very liquid system going into the last quarter of the year. So definitely, if you add the fact that the DMO want to roll over ₦1 trillion, definitely for you to be able to fill all of this auction, all of these orders, then you must be willing to give the market a rate that they think is commensurate with the risk in the environment. So definitely at some point, they will really need to do something to clear, you know, the market, definitely.
Yes, Wale, this is pumping a lot of money into that part of the economy, and that is an issue. Again, as you said, if you government is distributing social investment program, 10,000 naira each, by the time it all adds up, it means more money in the pockets of people with very small and meager productive base of the economy in an election year with the electoral and political spendings coming in. That is going to be a very tough job for Godwin Emefiele and his team to get their mops and get the basket and whatever it is, and get the buckets and start mopping up, and that's going to be very difficult in Q4. So that takes us to the next MPC and inflation. What's your take?
Correct. Well, for begin with inflation, what we've seen so far in the year is gradual, you know, moderation, and we have consistently said that, you know, of course, this is expected, but from the next inflation numbers that is expected going into the rest of the year. Now, if you add everything we've said earlier with excess liquidity in the system, what we think is that the fact that the base effect that has significantly guided inflation to this point, 11.1%, has already faded out. We are expecting some uptick in inflation rates going into the rest of the year, such that what we have will be an average of roughly 12.3% for the year. Now, if you add that to what the MPC should do come 2 to 1 week from now, the next MPC meeting, at 14% for the MPR, we think that rate is most likely to be kept. The probability is actually around 70% that they will keep it at 14%. Of course, there are other views in the market that suggest that maybe they will even want to, probably raise it a bit, probably 50 basis points, 100 basis points to 15%. But what we are wondering is, what effect will that have? Is it going to bring back the capital outflow? Will investors look back because of 100%? Very much we doubt it. We think that MPR is still quite high in Nigeria compared to a number of African markets. Say for Egypt, I'm not sure there's any other market with a higher MPR than Nigeria, but I stand corrected on that. I can confirm my number. But I think at 14%, we are quite high, and we are trying to support the real sector. If you look at what the CBN is doing with the recent real sector support facility. So, how do you manage all of this? So we think it will be kept the way it is. Maybe they will only try to encourage banks to do more in terms of supporting the real sector with their 0% CRR at 22.5%, that they are, encouraging the CBN to give out at 9% now, such that, maybe they can do more in terms of how they want to create more clarity in that area. One of the key issues people are having now is that risk is not guaranteed by the CBN. So you're asking the banks to more or less go ahead and, give out the loan. Yes, it's attractive at 9% compared to 0%, but we think banks are really, really risk averse at the moment if you look at loan growth so far. So these are some of the issues the MPC will look at, plus the fact that yields are really, monetary policy rate is really on the uptick in the advanced market. So they will try to balance all of these things, but we think the likelihood for them to keep MPR at 14% up until, you know, the next meeting is very high.
So what do you think, aside those who have the regulation or the rules to buy treasuries and bonds and put in their books, the insurance firms, the PFAs and the rest of them, do you think this is a market for retail investors at this point in time, fixed income?
Well, I mean, for retail investors, different houses have created products to support them. They can buy mutual funds. They can, you know, approach some of these houses that have created, you know, retail-based products. But you know that we also have a savings bond that also supports the retail investor, and the treasury bills market is largely for the big guys, considering the fact that you have a minimum of about 50 million in that space. So I think for buyers, I think what is happening in the market now, considering the fact that the sentiment for equities is really bearish, those who are, you know, who have appetite for risk can take advantage of some of those numbers right now. But for those who have less aversion to risk, you know, that are risk averse, they might want to look at, you know, some of the attractive yield that we are seeing, especially at the longer end of the curve at the moment. I mean, it's really attractive. At the shorter end, well, some of them might want to position for, you know, all the expectation we've seen in the market for a slight, you know, a little bit of a higher rate going forward. So I think for retail investor, if they approach some of the, you know, shops, United Capital can help them clearly. They might be able to benefit from what is happening now.
Okay, so let's throw in a little bit. Let's spice it up with liquidity and the FX. I'm sure you see the daily trade value at the I&E window. As the head of research, I'm sure you keep your eyes on all the numbers on a daily basis. So if you see this flow, last week about $740 million, or the previous week, 2 weeks ago, last week was about 1.13 billion US dollars. That's quite massive for just a week. So, is this just equity side sell-off or a bit of a pressure also on this conversation about the bills and bonds?
Well, I think it's all across the markets, maybe less of equity and more of what is happening in the debt markets. Offshore investors are kind of exiting from all indication. And if you look at the inflow from the I&E window, FPIs alone have contributed more than 50% of what we've seen in that window up until May. But since June till date, their contribution in terms of inflow has been, you know, have been reducing gradually. And what they are doing now more is kind of exiting from all the numbers. So far in the year, we've had an average of over 2 billion coming through that window, but we've seen less activity since the beginning of July. So we think they are exiting. The number you gave around the reserve is also quite telling. We noticed about 900 billion left in August alone. But we think that Nigeria is still in a good place. I think I heard one of your guests earlier on speaking about the position of the reserve, the fact that is, you know, the depletion is faster compared to what we had earlier in the year. But I mean, at 45, we are still in a good place. Oil is still expected to stay well above $70 to a barrel. So, you know, that puts the CBN in a strong position to continue to sustain the market at this level. And I think for the CBN, they are really, really cautious about what's happening in the, you know, FX market. So they are they are strongly looking at stabilizing the rest of the market.
Wale,
so
very quickly, and the last one. This notice this morning that the price of bread is about to go up. What's your take on this? Do you still hold the Lord's Prayer here?
The price of bread is about to go.
This morning. I'm sure you remember that.
Clearly, I think I should say the Lord's Prayer.
Remember the verse. Yes, give us this day.
Yes. Yeah. I do. Yes. I do. I mean,
yeah. So do you think we should say that prayer more often? Maybe.
Definitely, we need our daily. Clearly, I think we should say it more often because we need bread. I mean, it's a staple food in Nigeria. Every Nigerian needs, and food is a major contributor. Food is a major contributor to inflation numbers in Nigeria.
Exactly.
So if you have the price of bread going slightly higher, it's going to mount pressure on inflation.
Wale, thank you so much. Thank you. We appreciate your time this morning. Let's go back to the marketplace after the break. Wale Olusi from United Capital, the head of research.